It's my pleasure to welcome you here to the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you can make better financial decisions in your life. And I've been asked so much recently about mortgage rates, and I realized I need to talk to you about something that is so important in what you pay over time on your house, the length of a loan, and how you shop for a loan. Also, according to the Journal of the Alzheimer's Association, Alzheimer's fourth leading cause of death in the United States for people who are 70 and older. It costs $80 billion per year direct medical spending. But I want to tell you something. It's not all a story of gloom and doom. There's been so many breakthroughs from scientists and pharmaceutical companies, and there are other things you can do that prevent or delay dementia. And I want to tell you, if you are worried about it, there are things that you can do proactively, and we're going to talk about that later in this podcast. So let's talk really great news. Mortgage rates have surprisingly fallen more than economists would have expected and sooner than they anticipated. I thought that we were going to see movement in rates the second half of this year, and we have, but the change has been greater than I expected. And there is a special thing in the market right now that's really significant. So if you take out a 30-year mortgage, your credit standing is good. You're a solid borrower. The average mortgage rate, and there's regional differences, about 6.6% more or less. And that's a trailing indicator because rates are on a downward cycle. Now, do they go down in a straight line? No. They kind of bump along, up a little, down a little, up a little. But the trend is absolutely a home buyer's friend, with the rates dropping from the absolutely depressing territory of close to or around 8%. We've come down into the upper sixes. I mean, obviously, if you're sitting there saying, well, why should I be excited about that? I got a fixed rate at 2.5 or, whatever it is that you got when mortgage rates were being artificially manipulated down to stave off a depression. But now we're in the real world again with interest rates. And this is a very positive move. But the big positive that I want to mention, and then I'm going to talk about how you shop for a mortgage, is 15-year loans. If you are in a position financially to afford a 15-year, what the payment is per month on a 15-year, those rates are unusually lower than normal below 30-year. Normally, the spread between a 15-year loan and a 30-year loan is about half a point. Right now, it's actually close to 1 full point lower, about 0.90%. That is a shocking spread. I mean, very, very unusual. Why is the 15-year abnormally lower than a 30 based on historical? Because we're in an environment where people are expecting that inflation's trended down, it's going to continue to do so, and the money in a 15-year loan, if I'm a lender or an investor and I'm willing to lend money, I am expecting less in interest from you if I'm lending you, taking on interest rate risk for 15 years versus 30. But in a falling rate environment, there's even more interest on an investor's part of having their money locked down for a shorter period of time, giving you a larger spread between a 15-year and a 30-year. So if you took out a loan at 7.75%, you have enormous incentive even now to look at refining, if you can afford the monthly payment, into a 15-year loan. But shopping for a loan. If you're shopping particularly for a refi, you shop everywhere. You're shopping for a new mortgage, buying a home. You cannot shop as widely because I want you to use somebody local. But the key to saving money on a mortgage is credit unions. Banks charge so much more typically on a mortgage. And then we have the non-bank lenders that can be kind of all over the place. And non-bank lenders have become very big in the market. Credit unions that used to be meaningless in the mortgage market are now dominant in the mortgage market and offer better rates. But it's not just the rate. When you're comparison shopping, the quoted rate is one factor. The second thing is, do you have to pay points? Each point is 1% of the amount of money you're borrowing. And then the third factor is closing costs. And they must be disclosed to you now up front. So you use all three of these to figure out what is your best deal when you're shopping for a loan.
All right. And I also think mortgage brokers can be helpful too.
Yeah, which I mentioned, the non-bank lenders.
Yeah. But it's so good to have them compare. I've used them in the past, and I don't know, it helped me. But I did get my incredible mortgage from a credit union, so I'm with you.
Yeah, and let's say again for the thousandth time.
No, I'm not saying it.
1.875% is Christa's refi.
Bob in Georgia says, I moved and bought a house during the chaos of COVID at the end of 2021. The inventory was low and the process was pushed at a very fast pace. During the rush of getting approved for a loan, looking at homes and putting down offers, we got a loan using only my name on the mortgage. We got a super rate of 3.125% for 30 years. I'm now wondering if there's any way, short of refinancing and losing my great interest rate, of adding my wife to the non-assumable loan. My only concern in the grand scheme of things is that if I were to die, she'd have to pay off the loan completely, which she could do with life insurance, but I'd rather have her be able to continue to chip away with this rate.
Bob, unfortunately, almost always the answer to this is no. You contact your lender, ask, and you need in writing that they will allow her to be added to the mortgage without an escalation in the interest rate or a requirement to refi. And as a almost always rule, the answer is going to be no. So you already know what you would do in the event that you were to die unexpectedly prematurely, that she would be able to use life insurance to pay off that loan. Because what happens, banks are warm and fuzzy. If a couple owns a home and only one is on the mortgage and that individual dies, the banks then use their right to do something known as due on sale. And they treat it as if you just sold the home and the mortgage is immediately required to be paid in full. I mean, that is really warm and fuzzy on the part of the banks. So anyway, it's not going to be an option that would make any sense, taking out a 3.1% loan and going into if you went 15-year, going into 5 point whatever. So you just have your plan, hoping that you're going to live a really long time and this never becomes an issue.
Kevin says, it didn't put a state, I remember the inspiring story about your son's journey to become a pilot not too long ago. I've recently been motivated to explore a similar path. I'm 39 years old and I'm very interested in pursuing a career as a commercial airline pilot. Given your insight and experience, I would greatly appreciate any advice you could offer on the most cost-effective and efficient ways to achieve this goal. Specifically, I'm interested in understanding the key steps involved and any resources or programs that might help expedite the process while keeping expenses manageable.
So, Kevin, I love that Grant's story was inspiring to you. The first thing for you to do is to go to what's known as a Part 61 school. As you start looking around, you'll know what that is pretty quickly. and get your private pilot's license. That is a fairly expedited process. It is not that expensive. We're talking $10,000 or so where becoming a professional pilot, we're talking 6 figures minimum. And you'll know from going through the private pilot training whether or not this is something that would be a great move for you and a great path to go on. And it's low stakes, low risk. And you get the private pilot's license, you just go to private airports in your area and see what Part 61 schools are and what their estimate is, and they'll usually have a guide to this, for you to go from 0 hours to having your what's known as PPL, private pilot's license. If you get into it and you're like, yeah, what have I been doing all my whole life? I'm 39 and now I'm like, I've discovered what I should be doing. Then you're on a really serious path, because you get your PPL, and then going to flight school is going to require that you discontinue your career, and you're going to have to spend minimum $100,000 to get your professional pilot's license.
Even at a state school, it would be that much.
You wouldn't go to a state school. I mean, if at 39, if you're going to become a professional pilot, you go to
just a flight school?
Yeah, Part 141 school. 141, 131, 140. Oh, it's 141, 131.
Either way,
anyway,
yeah.
You go to a training program that the FAA has certified that you need 1,000 hours total to fly for an airline. There are certain certifications you have. And it costs a lot of money to have the CFI, the certified flight instructor, with you, training you, taking you through single engine, multi-engine, instrument, all the various levels to become a professional pilot. The meter on high cost, though, stops once you have enough training that you become a CFI, a certified flight instructor. You're now getting your flight hours that you need for free training other people. So it is a very involved process, but you start the whole thing by first going to a Part 61, seeing if you really want to be a pilot, getting the private pilot's license, and then going the next steps. 39 is an interesting age, because most people say you have to retire in the United States at age 65 from the cockpit with a commercial airline. Most people say that really the last point at which to really do this to make it economically viable is age 35. I think if you find you're really determined and you love it, 39, you're okay.
All right, Howard in Arkansas says, I've tried to live a debt-free life. Slowly over the years, I paid off all my store credit cards and canceled them. After several years of working at it, I paid off the last card. I hate the excessive interest rates they were charging. I paid off my home and my car. I'm finally debt-free other than the daily essentials of living. I sold my home and paid cash for a new one 7 years ago.
How about that? Cash for the home.
I started taking out personal loans with my bank just to keep a credit history. I had my loans on auto pay and did this for 7 years. Then my bank informed me my new loan would have a higher interest rate. They said I had an unpaid balance from my last loan, that their system wasn't set up to take a final payment of a different amount after all these years. They said they mailed notices to my old address by mistake. Due to negative credit information, my interest rate would have to be higher on a new loan. I checked with the big three and found it was my bank who dinged my credit report. Took several months to get them to attach a statement to my report. Paid off that loan. Now they say they can't make any more loans due to having no credit history with the with the one they used and 600 from the other two. This is after having an 814 score with one that they used before the credit bureau they used before the problems began. I found my bank also failed to report any of the loans I took out and repaid. Even my paid off home loan doesn't even show on this company's website. This credit company did suffer a security breach years ago. How do I recover my good credit score?
Okay, there's a lot there, and I'm kind of getting lost in the weeds of all the details. First of all, I want to tell you it's fantastic, the journey you went on, and how you made debt so insignificant in your life, paying cash for a home, everything you've done, and your graduation gift is this bank messed up on the final payment and all that after you had such a good payment record. First of all, the low 600 credit score you have. What I want you to do is I want you to file with the credit bureaus, the two that still have a file on you, that you are disputing the negative credit information on the report. The same time you contact the bank and tell them why you've disputed and that they have admitted it was their error, that you were never told there was this small little balance, and you want them to correct the credit file and remove the negative information, and that you filed a complaint about them at consumerfinance.gov, the Consumer Financial Protection Bureau. You've got to be very methodical about these steps. Do them all within a 1-week period where you dispute with the two credit bureaus that have this negative information listed. You dispute with the bank, and you file a complaint about the bank with the Consumer Financial Protection Bureau, which gets you away from some contract call center that nobody has any authority or knows anything, and you'll be dealing with people right in the bank. And I want to hear back from you if pushing all those levers gets this negative information removed from those two reports, as it should be if everything was as you said. Coming up ahead, I want to talk about something that would not normally be part of our podcast. And it's part of our podcast because the disruption it causes in people's lives, and for many adult children, forces people to sidetrack their careers, maybe somebody stopping working to take care of an aging relative, any of a number of things that happen because of dementia. And the cost alone, $80 billion a year for society. There are things you can do that will make a difference in having that diagnosis or the severity of it. And I want to talk about that right ahead. The human brain, even with all our technology and knowledge of scientists, is still a puzzle. There's more that we don't know than we do know, and the complexity of the human body and the brain. But there's more and more becoming clear that dementia, which affects a significant share of population as people age, particularly by the time people are in their late 70s into early 80s, and it affects quality of life, obviously, of the individual who has dementia. It affects their wallets, their family's wallet, and the nation's wallet. And I think about the effects that I keep reading about with people who are mid-career having to drop out of the workforce or drop off a career ladder because they're needed to devote time to care for an aging relative, an aging parent, or an aging friend. I mean, there's not a lot of happiness in anything I just said. So where is the happiness? Number one, as more and more research is done, prevention always is the best cure, right? And scientists and researchers are learning more and more about what are the things you can do that either delay or prevent the onset of early dementia or dementia progressing. And there are things that are so simple. Do you know that as people's hearing deteriorates, it will lead to deterioration in brain function if people don't get hearing aids? And the great news, I'm going to talk about it again soon because of the announcements from various companies, including Apple. where getting hearing aids, FDA-approved hearing aids, has dropped like a rock in price. And now that so many of the items don't look like hearing aids, people that are reluctant to be seen in hearing aids now can get that assistance. That's just one example. There was a report recently about modifiable things, things you and I can change that can reduce the onset or the progression of dementia by almost half. I mean, that's amazing things to think about. And then if somebody does get a diagnosis, now there are so many pharmaceuticals that can retard the growth of dementia, that can make a big difference, not with every type, because dementia is an umbrella kind of thing for so many different diseases of aging of the brain. But I want to tell you that this is an area with so much hope. So there are things that you will learn if you ask, if you have a primary care doctor and you're past age 50, this is a conversation you want to have. That the doctors usually aren't even having patients wanting to engage in that conversation. They don't even want to think about it. Wait, I'm not, that's not going to happen to me. I'm not going to discuss that. Discuss it. Because there may be simple things you can do that science is showing either indications of or clearly that particular changes, can improve your odds of avoiding or delaying having this happen to you. And then the meds, if it does happen, that can delay the progression. I mean, this is important. I don't know anybody who has not had a loved one or a friend. My mom had dementia later in her life, her last 18 years of her life. And she stayed joyous through the end, which was great because her name was Joy. But she reached the point that she didn't know who she was, where she was, or who any of us were. And, that's always tough to see, right? And so that's why I want you to know this is not, that is not set in stone that, oh, well, that's the lot in life I got. We've got more and more positive developments in this area. It's not just your fate sealed for you.
Okay, we'll go to some questions now. Speaking of the hearing aids, Wayne in Minnesota wrote in and said, who do you recommend for hearing aids for low to moderate hearing loss?
Okay, so that's so funny. I just alluded to it. There you are.
Right, that's why I put it there.
You just went right by me.
I know, I got it. I just feel bad for Wayne.
So Wayne, this is great that Apple has mainstreamed with their AirPods the ability for you to have the AirPods work as hearing aids for people with mild to moderate hearing loss. $249. I mean, Bose really set this path off 2 years ago with breakthrough devices that you could use for listening to music, doing Bluetooth for phone calls, and having hearing aids all built into these little, look like just regular consumer electronics items. Now, Apple...
You look like every other teenager walking around.
or person in the airport. Every self-important blowhard in the airport God. Blasting on their...
Well, it's worse if they're not in the headphones and they have have you seen people walking around with their phone on FaceTime and they're talking out loud on it?
On the plane and the
Or yeah.
Yeah. Anyway.
Sorry, it's a beef of mine.
I think it's... I thought you were a vegetarian. Anyway, so... Wayne, the wonderful news is after Congress changed the law, it's been a slow walk to the cartel of hearing aid manufacturers responding to market pressures. But now that's going to intensify. And I saw the other day, I know there's going to be a shock, but I was in Costco.
Wow.
And I went by from the pharmacy, I was going by and I saw Hearing Aid Center had a big sign saying, hearing aids, $14.99 this brand, $14.99 that one, $15.99 for a pair of the other one. And you think about what hearing aids, the traditional hearing aids, how much they used to cost. It's showing the clear effect of all this new competition in the marketplace, because we were the only place in the world that people were paying more than just a few $100s for hearing aids. So now you've got, Wayne, these consumer versions that are absolutely affordable, and many of them are very comfortable to have in your ear.
Ted in Florida says, we just got notice from our healthcare company that my 5-year-old's data was part of their breach. I don't recall if we provided a social to the pediatrician. I try not to per your advice, but if they did have it, is there any easy way to freeze and prevent identity theft for a minor?
It's not easy, but you can. First thing I would do, though, I would call the pediatrician's office and ask them if they have your child's Social Security number in their file. If that is ultimately where the source of the breach, where the information would be with the Social Security number, then I would rest easy on this particular breach involving your 5-year-old. But there is a procedure that the 3 credit bureaus have in place for minor children, where an adult can go online to each of the credit bureaus, and in just 4 to 5 minutes each bureau, you can set up a credit freeze. Doesn't work that way for a minor child. There's a bunch of key personal information you have to mail in.
Yeah.
And it goes to a processing center, and they validate that you are legally able and have the right to set this up for your 5-year-old. And then it stays in place till a child has completed their 16th year. Then their credit becomes under their control at 17, not 18. Don't know why. That's how it works.
Beverly in Georgia says, I'm selling vintage Mustang on AutoTrader. I have a buyer that has contacted me and has offered to buy it sight unseen other than the ad. He is sending a cashier's check for the amount. Previous potential buyers have contacted us asking many questions and requesting more photos. This buyer only asked how long we had owned the car and why we were selling it. How can we be sure this person is legit? Is there a possibility we could be taken after we deposit this check?
Beverly, this is a path potentially to grand theft auto. It is very easy now for criminals to present what looks like a fully real cashier's check. You receive that check, you deposit it, the check will clear, and most commonly, and I don't know why the money travels so slowly in the banking system, but the cashier's check may not bounce for 4 to 6 weeks. You have long seen that Mustang go away with the buyer, and then the money goes away too. Cashier's checks are not a trustworthy form of payment anymore because of this problem. So how would I want the buyer to pay you? First of all, I find it hard to believe they are a real buyer, that they ask no questions, and they are not even negotiating on the price. That's why I feel that the odds favor that this is potentially a crooked buyer. I mean, they may be legit, but the facts don't really tend that direction. So at Beverly, I'd want the buyer to pay you. If they're going to buy it sight unseen, I want them to pay you instead of by cashier's check. I want them to pay you by wire transfer. That way you have actually true collected funds, and you're not going to have to worry that later, after they've taken possession of the vehicle that's now long gone, that the money is gone too. And, a vintage Mustang is such a cool thing. You don't say what year yours is, but I just love the Mustangs from the 1960s. I want to thank you so much for joining us on today's podcast. Hope you have an absolutely great day. And gosh, tomorrow we have Clark Stinks, my favorite podcast each week. is when I get to learn from you where advice I've given was incomplete, inaccurate, or just plain dumb. So join us tomorrow for really smart advice. Go to clark.com and clarkdeals.com and know what we're about. You learning ways to save more, spend less, and don't let anyone ever rip you off.